everybody. I said I would do a little video on this to try and clarify some of the aspects to do with this consultation. So the consultation is out because it will potentially affect any sole traders, self-employeds. And in the first instance, that tranche of people in particular is self-employeds who also have PAYE income. I think this is quite an important thing to be aware of, is the intention is to start with that group of people. So the proposal is to bring the payment of your tax bill into much closer alignment with when you actually earn the income. The consultation itself is only open until the 4th of August, so not much longer, and really try to get your opinion in and make your voice heard while you can. There's an online form which you can complete. You can email HMRC or you can respond by post, and all of those links we will put in the WhatsApp group as well as in the comments associated with this video. So what are they actually saying in the consultation? Well, the first thing is they're kind of setting out why they think this is a good idea. A consultation is not law. It has to be passed by Parliament before it comes into force. So there's really quite a lot of hoops to jump through. But obviously, if nobody objects, then things just go through. They're expecting to issue an update, having had their responses in autumn 2026. So they are saying that around 1 in 5 income tax bills are paid late. And by income tax bills, they mean a combination of, it could be either the balancing payment that's due at the end of a tax year, or they might mean the payments on account. The combination of any of those versions of things when they say tax bills are paid late is why they're saying that 20% of tax is paid late by punters. So obviously that's one big thing they want to close the gap on. The second thing is that they're saying, quite often that tax bill might be coming as much as 22 months after the income was earned, which is really at the extreme end of things. But nevertheless, it can be a long ways after the income was earned. And obviously that's contributing to a cash flow problem from HMRC's point of view for the Exchequer, but potentially also a real cash flow problem for the taxpayers, because as we all know, if the money is sitting in your bank, it's quite hard to kind of ring fence it and keep it separate, knowing that it will be eventually needed for tax, especially if you haven't got to the point yet where you know what your tax bill is going to actually be. They also want to bring the UK into closer alignment with other OECD countries where tax is collected much sooner. Typically, in a lot of them, in Spain, for example, it's sort of every 3 months, sort of similar to the proposal here. They are saying it will improve budgeting. It will reduce bill shock, bill shock is what they call it when you go to do your tax return and then you go, oh my God, I couldn't possibly have earned that much money. How could I have that much tax to pay? And I think we all know that that is a thing. And this is in, the positive side of this would be that they're saying they're aiming to reduce that happening. Reduce late payment penalties, because of course they levy interest, and they levy late payment penalties separate to interest on any payments that are made late. So of course to be covered with that. Bringing payments closer to real time. And probably one of the really important things is that it's sort of part of a bigger picture of reform, of which at the moment, the big one that's taking over everybody's life as a self-employed person is making tax digital. And of course, making tax digital is reporting the income and expenditure quarterly. So you can see, back at its inception, it was always intended that the tax payments would fall into alignment, and that has dropped off for now. But you can see that that is the obvious next step, and that was probably really always on the agenda, was to get the reporting in first and then get the tax bill paid on the back of that reporting, along with other things like regular direct debit options, budget payment plans, and other reforms that they're putting in. So who is this going to affect soonest? And what is the effect going to be? So the first group of people or the first tranche of people, the cohort in phase 1, will be freelancers who also have PAYE income. And for musicians, that cohort, the really obvious candidates there are those of you who have both self-employed freelance earnings, but who also have, for example, a peri-teaching job where it's an employed job. So I know peri-teaching is sometimes self-employed, but equally likely to be an employed position, or maybe you're teaching at a music college or a technical college or a performance college or whatever it might be. Those sort of teaching sources of income are quite often employed income. So those of you with that mixture of the two are the first cohort that they have in mind. And the proposal is that the tax would be collected through your PAYE code. In other words, along with the tax that gets deducted from your PAYE income. So each month when you get your take-home pay from your employment job, it would be net of your normal tax that's deducted at source that you're used to, but it would also now be net of an additional layer of tax, which would be the charge that they're estimating should relate to your freelance earnings. So you're going to see less take home is the short answer on all of that, because you're paying your tax bill as you go along. The consultation says let's start there, but it then also says, we'd like to see this rolled out to freelancers, self-employed more generally, including those who don't have any PAYE income. We'll get to what that actually looks like in a timeline in a minute, because it's slightly bamboozling to think what amounts of tax am I paying at what times for some of these things. So the current system, as most of you will know, is a payment on account is asked for when your tax bill is more than £1,000 and less than 80% of your income tax is already paid at source. And that usually means paid via PAYE. So if the vast majority of your income is paid by PAYE, even if your tax bill is over £1,000, if 90% of your income tax bill as a whole is collected via PAYE, then you're not going to be asked to pay on account. But what often happens is that threshold tips back and forth from one year to another, and we quite often see people slip in and out of the payment on account system, quite regularly, depending on whether they tip over that £1,000 tax bill. Because if you tip over that and you don't meet the 80% criteria, then you are going to be asked to pay on account. So then suddenly that particular January's tax bill is always the balancing payment of whatever you might owe, plus a 50% payment on account. And that's always a really unpleasant January bill. There are safeguards in place about how much tax HMRC can actually deduct from your PAYE income. So in other words, they can't just take the entirety of your month's salary in tax. Even if you owe it, they can't do that. There are safeguards in place. And one of the key parts of the consultation is talking about those safeguards. Do we think they're robust enough? What should they look like? How can we make sure that people are not massively disadvantaged if this sort of proposal goes through? So the intention is that this starts in April 2029 for the 29-30 tax year. So in other words, what that means is April 29, May, June, all of 29 and going into the beginning part of 2030, you're paying your tax bill, if you like, in real time for that particular tax year. Now, how do they know what you should be paying? That is predicated on your most recent self-assessment tax return, which is actually going to be a year and a half prior, because of course the one in between won't have even become due yet at April. So starting in April 2029, you're going to start to make monthly payments for your 29-30 tax year. So you'll pay in April, May, June, July, and so on of 2029, and you'll actually be paying your tax in real time for that tax year. Obviously, you don't actually know yet what your freelance tax bill should look like for that tax year, so it's predicated on your 27-28 tax return. So it'll be based on the tax return that will actually start next April's tax year, 27-28. And they will use that one as the basis for the estimate that they're then going to start collecting in April 2029. So you'll be paying that in sort of real time, if you like, albeit they will be estimates based on a tax bill that will have happened 2 tax years before, 27-28. But as well as that, and here's the real kicker, as well as that, you're also going to be paying a balancing payment in January 2029. So that will be a January 29 31st of January bill payment for the 27-28 tax return, same as usual, paid in January 29 if there's any extra bits to pay. And then in January 29, you pay your first payment on account for the tax year 28-29, with a second payment on account for 28-29 due in July 2029. So now let's just pause for a second. January 2029, you're going to pay your balancing payment for the 27-28 tax bill, and you're going to pay your first payment on account for your 28-29 tax year. Then February, March, fine. April, you pay month one of your estimated tax bill for 29-30. May, you pay month two for your estimated tax bill, 29-30. June, you pay month three. July, you're paying month four of your estimated tax bill for 29-30, but you are also paying your second payment on account for the 28-29 tax year. So you've got the 6 monthly payment due in July, as it is as usual for 28-29, but you're also in month four of 29-30, and they coincide, and you've got both of them coming due together in July 2029. So that month is going to be no fun at all for anybody. Obviously, there is a massive cash flow impact to consider here, and that is one of the primary purposes of the consultation, is how should we be dealing with that. And that's one of the things that it would be really worth going into detail on when you share your views on the consultation. So as we talked about a little bit, this is just a recap. It should reduce these horrible tax bill shocks that we get sometimes just before the tax bill becomes due at the very end of January. It should help you budget. It should reduce the tax debt. That's good for you as a punter, but also good for the exchequer. It should reduce late payment penalties because you won't be late paying tax. It should make it easier to reflect on what your likely year bill is going to look like and be a little bit better prepared, albeit that should be happening anyway, to be honest, for many of you by this point, because you'll be well into making tax digital. At this point, the threshold has gone down to £20,000 of turnover in the current year. So if in 26-27 your turnover is more than £20,000, you are going to be into MTD and making quarterly reports of your income and expenditure from next April. And that being the case, you already have a sense of what your tax bill is going to look like. Although, it brings us to one of the major failings of the Making Tax Digital tax estimate, which is it's only looking at the self-employed and maybe land and property if you've got a rental property. It's only looking at that, and it's not factoring in at all the fact that you might have PAYE income. So there's this big sort of gap in terms of the estimated tax bill that they give you. But nevertheless, those of you who are already in will know we've just started filing returns. They're all due on the 7th of August. And, we know they give you a tax estimate at the end of filing your quarterly return to kind of go, heads up, this is what we think your tax bill is going to look like. It's something, it's probably better than nothing, but it's by no means accurate. And this is one of the problems, is that getting this accuracy across the two different types of income is really quite difficult. From my point of view, in my opinion, one of the most worrying parts of this is that the way the tax bill is collected is obviously through your PAYE income, so, as part of the payroll each month. But critically, the payroll people are told how much tax to hold back by virtue of the PAYE code that you are issued. And you're issued a PAYE code by HMRC each year, and they get updated quite often throughout the year if things change. And you can ring HMRC, good luck with that, but you can get in touch and try and have your PAYE code updated. But I think lots of you will be familiar with the situation that you get your PAYE code updated and it doesn't go through, or somebody doesn't do it properly, or HMRC say they're going to update and it doesn't. So it is massively dependent on a seamless flow of information from you, the taxpayer, to HMRC to issue an accurate PAYE code, to the payroll department of your workplace, your employer, to put it in and plug it in and code things out correctly, and then for the correct amount of tax to be deducted from your monthly employment income. And for me, that really dangerous gap is the flow of information between HMRC updating PAYE codes correctly and them being disseminated out to the employers and to the payroll offices. I really worry that that is not going to be done effectively and often enough and accurately, and it has potential to cause, quite a lot of difficulty. If it worked, it should be great, but my worry is that the practicalities of that, there's not the infrastructure in place at the moment. We don't see PAYE codes being particularly accurate or issued in a timely way or updated in a timely way, even at the moment. So to suddenly expect that they're going to be done sort of frequently during the tax year for all of the different taxpayers affected seems to me to be optimistic. So that is an administrative worry that I would have for people. There's cash flow concerns for people, obviously. There's issues around seasonal income. Your 27-28 tax year might be a bumper year and your payment on account therefore looks exaggeratedly high. And in 29-30, you're having a much more tricky year and you're ending up paying more tax than you should. Now, the consultation says you can absolutely get in touch, update your PAYE code so that everything is adjusted and it's only the right estimated amount that's coming out. But again, this is all dependent on a flow of information working really smoothly. So the seasonal income, even though you're entitled to update HMRC with revised forecasting, will that forecasting get through to the people who need that information effectively or not? I don't know. So those are the kind of concerns that I would have. And obviously that seasonal income aspect and fluctuating income from one year to another is particularly the case for musicians. So there you go. What do you think? In principle, I think helping us all to budget is a great thing. I think in principle, closing the tax gap, helping people avoid tax debt, making sure that they have enough money to pay their tax bills and they're encouraged to know where their business is at any given moment in time, all of that I would really support. But I think we have to be really mindful to help workers like musicians with seasonal tax flows and with very variable income from one year to another. That's why we have creative averaging, for goodness sake. We know that for creators it can be very variable from one year to another. I would have concerns about that group of taxpayers in particular, but this is your opportunity to get in there and tell them what you think. So do reply to the consultation. The link is in the WhatsApp chat for those of you for whom this video is a prompt from that WhatsApp chat. And for anybody who's just stumbling across this in a random way, we'll make sure that the link to the consultation is in the comments below. All right, thanks very much, everybody.